They look at the United States and see what we're doing as really sort of blunt and poorly designed, but they look at China and are worried about overcapacity, worried about a China shock 2.0.
Obviously, we, have seen a set of dynamics in which Senate and House Republicans have generally gone quiet or sided with President Trump on all manner of issues, but obviously did see a few prominent statements come out following the announcement of the investigation into the Fed and Chairman Powell that seemed to suggest that a few key players would be willing to stand their ground on this issue. Are you hopeful that will endure? With the global economic upheaval and uncertainty that we faced over the course of the past year, I couldn't be more excited to talk to our next guest. Jason Furman is a professor of economics at Harvard's Kennedy School and a senior advisor here at the Asia Group. He was also chair of the Council of Economic Advisors under President Barack Obama. Let's give a listen. Jason Furman, thanks so much for joining us today on What Comes Next. It's great to see you.
Great to be with you.
I've been looking forward to talking to you for many weeks, Jason, because we had some really thoughtful conversations over the course of 2025 about how the economic shocks of last year would affect the American economy, the global economy, and how they were reshaping patterns of global trade and commerce for the medium to long term. As 2025 has come to an end and we've started a new year, I think it's a great opportunity to reflect on how some of the incredible shocks that we saw last year have and have not produced their expected responses, as well as how 2026 may still prove to be a hugely consequential year for both the American and global economies. So with that, I'm super excited to dive into our conversation. As we've talked about before, Jason, after the Liberation Day tariffs of April 2nd, many economists predicted that the United States would be in a recession by the end of the year, possibly something worse, and that the global economy could be dragged down by these extraordinary tariffs, which still lie at levels not seen since the 1930s. And while, of course, those tariffs have turned out to cause substantial economic upheaval, they haven't necessarily resulted in the most dire of those predictions being borne out. So as we move into what is now year two of this new level of global economic fragmentation led by the United States, I'd love to start by asking you to just help us understand where we are, both in the American economy and in the global economy, in how they have responded to these U.S.-led economic shocks.
Yeah, so it's great to be with you. And I just want to underscore what you just said. The average tariff rate prior to President Trump coming in for his second term was about 3%. Now it's around 12%. That's the highest in nearly 100 years. So it's a dramatic change in U.S. tariffs. Now, it's not quite as dramatic as what was announced on Liberation Day. In fact, it's about half as big an increase as Trump originally announced. Another, so far pleasant surprise, this has been relatively little retaliation. So part of why part of why so many people expected something much larger was they thought tariffs twice as high, retaliation from other countries. We haven't had either of those. But another thing is just people are just impatient. They expect you to make a policy change and that you see it, a minute later, and that it shows up instantly. And there was such itching and hunger for finding it right away. Sometimes these things take time for businesses to reorganize their production, for other countries to, make different arrangements. And so a lot of the trade effects just depend on relative prices. And I expect to see those happen. I expect the United States economy will be about 0.5% poorer per year, every year for the rest of time as a result of this. What hasn't happened, and I don't think will, is the additional added harm from the economic uncertainty. That was an open question. Is the uncertainty from businesses going to drive them to cut back? And for whatever set of reasons, that shoe didn't drop. But the trade shoe is still in the process of dropping, and I expect more this year.
That's a great explanation, Jason. And I just want to pull on a couple of those threads that you laid out that I think are particular germane to our listeners. So one major factor you noted is that, of course, the tariff levels that were announced on April 2nd didn't necessarily factor in, or economists' predictions didn't necessarily factor in the fact that numerous partners would come flocking to the United States to actually cut trade deals that reduce those levels at least somewhat, which of course poses the question of whether or not, to some extent, Trump's more coercive economic policy is yielding some of the gains he was hoping for. But second, and to my mind, even more interesting, is the fact that we haven't necessarily seen a downward spiral of beggar thy neighbor retaliation from allies and partners who retaliate simply because the United States leveled these historically high tariffs on them. In fact, in some cases, you actually see the opposite, right? I would probably argue that the European Union and some of our allies in Asia are doubling down on their identity as free trading nations and actually looking to find ways to expand ties with other countries that want to recommit themselves to rules-based free trade. So I wonder if you can say a little bit more about what those dynamics mean for the way that we're reshaping the global trading system. That is, are we looking at sort of a heterogeneously fragmented worlds in which some countries like the United States maintain these historically high tariffs that put downward pressure both on the U.S. economy for the foreseeable future, as you said, and on their partners, while others actually look to expand the pockets with whom they can freely trade according to the prevailing rules?
Yeah. When it comes to the United States, I think what happened with other countries is two things. One is they were unable to get together and coordinate. You saw that originally when Mexico and Canada went their separate directions. And the U.S. has a lot more leverage bilaterally against, all the major economies in the world than it does if they all got together. And then second, with the exception of China, they were unwilling to pull extremely aggressive cards. Europe could have denied, ASML services to anything related to the United States or something like that. But they weren't going to threaten something like that, especially with the NATO umbrella. So yes, they didn't retaliate against the United States, but as you just said, they are continuing something that had predated President Trump's second term, at least, which is forming a lot of arrangements with each other. And this goes back. I mean, the United States was central to TPP. We pulled out of it, and it went ahead without the United States. The United States, at the same time, was negotiating a free trade agreement with Europe, TTIP it was called. We basically sort of ended that, but Europe went ahead and struck deals with countries like Canada. There's a clear dynamic of countries around the world trying to deepen their trade relationships with each other, free up that trade. But there's a really important exception to that, which is relationships with China. That's much more complicated for countries around the world to navigate. They look at the United States and see what we're doing as really sort of blunt and poorly designed, but they look at China and are worried about overcapacity, worried about a China shock 2.0, and trying to put their own tariffs on as well. Now, it's much more complicated for many of them because they have deeper trade relationships even with China than the United States has. But, excluding China, it's relatively simple. They're all trying to get together, deepen those relationships while figuring out how to navigate the China side.
It does raise the question in retrospect, of course, about what this year might have looked like instead of leveling tariffs across the board on partners around the world if we had all just gotten together and focused ourselves in our economic toolkit on the China problem. But I digress, and that's clearly not the world that we're living in now. You had a recent excellent piece in the New York Times arguing that President Trump could be on the precipice of losing control over the U.S. economy. And of course, shortly after that was published, we learned that DOJ was investigating the Federal Reserve. And we saw a very bracing video from Chairman Powell defending the independence of the Fed. Something that many economists, including you, have told us over the course of the last year Is that something that would really place pressure on the United States' economic dominance globally? Would be a global perception that the Fed was no longer independent. So when you look towards 2026, both, given your argument in the New York Times and then these recent moves on the Fed question, what do you see as the biggest risk factors both to the resilience of the U.S. economy, obviously buffeted by the AI revolution, and then the resilience of the global economy?
Yeah, so there's a set of contradictory forces in the macroeconomy in the United States. There's what appears to be very strong economic growth in terms of GDP. It's happening, though, without a lot of job growth. There's inflation that's sending mixed signals. Maybe it's still too high. Maybe it's coming down. And there's an economy that's disproportionately reliant on one particular sector, the AI boom that you just referred to, rather than the type of more diversified, broad-based growth that we'd like to have. There's an awful lot of positive scenarios for the U.S. economy in 2026, a lot of growth momentum going into the year. But there's also some scary downside risks in terms of both recession and inflation, as there always are, probably a little bit more right now. So then the question is, with that macroeconomic backdrop, how are we managing it? And last year, President Trump was just enormously dominant as he remade fiscal policy, both through legislation and unilaterally through DOGE, as he remade trade policy, remade regulatory policy. And the one area that he wasn't able to remake was the Fed. Now we come to 2026, and he's largely been halted, in some cases reversed. I would argue this attempted prosecution of, possible prosecution of Jay Powell actually affirms my thesis in that there has been such backlash to it from across the board, politically, economic actors in the Senate and the like, that rather than an effective Machiavellian tool to control the Fed, it's almost the opposite. It proved that you can't control the Fed, at least can't control it in this type of way. And at the same time, also, there's some loss of control of Congress as they do appropriations bills to fund the government, which needs to be done this month. They are largely ignoring Trump. They ignored his call for $2,000 checks, and they might even go ahead and do subsidies, expanded subsidies for the Affordable Care Act and restore those. So you have a much more uncertain and divided political landscape that is confronting this uncertain and divided macroeconomic outlook. And what will prevail is, I think, a certain amount of incoherent policy making, and my guess is that'll be fine, and the United States economy will be fine. But I'd prefer coherent policy making to be more sure about all of that.
No doubt. Can I impute, however, from your last set of comments, Jason, that you are relatively hopeful that Congress, including a few key congressional Republicans, will continue to hold their ground on Fed independence? Obviously, we have seen a set of dynamics in which Senate and House Republicans have generally gone quiet or sided with President Trump on all manner of issues, but obviously did see a few prominent statements come out following the announcement of the investigation into the Fed and Chairman Powell that seemed to suggest that a few key players would be willing to stand their ground on this issue. Are you hopeful that will endure?
I'm reasonably confident. You had 3 Republican senators out very strongly defending Powell. You had a number of others making pretty supportive comments as well. And I'm told in private there's several more Republicans that have that view. And in part, that's a testament to sort of economic consensus around the Fed. And in part, it's Jay Powell's political skills. He's spent a lot of time and known a lot of these people for a long time. The question is, how far does that generalize to other institutions, to other areas of policymaking? And I think to some degree it actually does generalize, at least more broadly, to economic policymaking, possibly even to national security, where you see a whole group trying to come out to preemptively address the Greenland issue.
Interesting. Okay. Well, that is relatively hopeful. I will say that on the sort of Asia-China side of the aisle, we have not seen a whole lot of a consensus or bracing collective action on critical issues like tech export controls or on Taiwan. But there is still time. And of course, the fact that we're seeing it on the Fed is really important. Of course, there is another branch of government that we haven't touched on yet that will potentially have a voice in all of this. And in the question of whether economic policy looks relatively more coherent or not in the coming weeks and months ahead. And what I'm referencing is the fact that the Supreme Court has been considering a case related to the question of whether IEEPA can be used as a basis for President Trump's tariffs. We understood last Friday that a decision might be imminent. Today is, we're recording on January 14th, and understand that a decision could be imminent today or a couple of weeks from now. But in the case that the Supreme Court were to strike down an IEEPA as a basis for those tariffs in part or in whole, it certainly seems like we could expect a period of some administrative chaos as the administration scrambles to reconstitute some of its tariffs using other authorities. We understand that the administration may be ready to announce new tariffs just as soon as a SCOTUS decision comes down, using Section 122 on a temporary basis to reinstitute 15% tariff levels to many countries. We also understand they've been doing the work over the course of the last many months to figure out how to use other authorities like 232s and 301s to rebuild some of these other tariffs for a longer and more durable period of time. But in addition to the question of whether IEEPA survives as a basis for the tariffs, there are also questions facing the court, such as whether companies may be eligible for rebates if IEEPA was not, in fact, a lawful basis on which to build tariffs. So give us a sense of what this period might look like, Jason, if indeed SCOTUS does toss out IEEPA, at least partially, as a basis for these tariffs. What will we expect for the economy? What actions are you expecting the administration to take next? And what should businesses be looking for as they wait to see what comes next in the Trump administration's tariff policy?
Yeah, well, uncertainty is coming back. I talked about that average tariff rate rose from 3 to about 12%. A little bit more than half of that increase was done under IEEPA, but there was then a very substantial chunk of it was done under 232, which isn't part of the current case. So the immediate effect of a decision would be to undo half of those tariffs. But of course, as you said, the administration has blustered and said they could get back to all of them through other means. I don't think they can really get back to all of them long term. I don't think they can get back to the types of flexibility where in the middle of the night they get upset about Brazil and announce 50% tariffs on Brazil. And then finally, I'm not positive that they want to get back to all of them. The direction of travel has been granting more exemptions, striking more deals to lower tariff rates, providing relief for things like coffee and beef. Affordability is a massive political issue. The tariffs have not proven popular. They're not delivering on higher manufacturing jobs. So the administration, don't get me wrong, they still like the tariffs. They're still going to have very substantial tariffs. They would still do something to bring back at least some of the IEEPA ones. But my bet is a year from now, the average tariff rate is maybe 8 or 9%, either because of the court, because of decisions the administration has made, much less likely because Congress has actually gotten involved.
In some ways, and this is, just speculation, one could ask the question of whether indeed this was a politically opportune time to litigate the question, right? It provides the possibility that the Trump administration will actually have a little bit of an exit ramp from some of its most damaging tariffs, which it increasingly has the data to suggest it should want to take in a midterm election year, where, as you say, affordability is the key question when voters go to the polls. So some chance they take the opportunity, as you say, not to put all of these tariffs back on and give themselves a slight economic reprieve, even though they will likely never admit that tariff policy was deeply damaging to the U.S. economy. Does that seem right?
Yeah, absolutely. There's not going to be we accept the verdict, tariffs are now going to be lower. There would not be a statement like that. In fact, there would be the opposite. Don't worry, this means nothing. That doesn't mean at the end of the day, they're not going to try to put together something that is objectively smaller than what came before it.
Fascinating. And do you have a view on this question of rebates? How economically significant will it be? If there is a possibility of rebates being granted to companies on the basis of tariffs collected since April, and how hard it will be for them to get those rebates if indeed they're eligible for them?
I certainly don't know anything about how easy or hard it will be for the companies to get them, and I don't think anyone really knows. We'll have to see what the court says. Macroeconomically, I actually don't think it's that important. It's a one-time impact on the debt. It doesn't change very much the cost of capital for most of these companies. Whether you're going to make an investment or not depends more on the attractiveness of the rate of return than how much cash you have. And for the most part, they pass through some of the cost to consumers, but not all of them. And in some sense, that was almost in anticipation of this happening, building this in to some degree. So I think I don't see much of a macro impact. Obviously, for all sorts of companies and their values, it'll matter.
So sort of stepping back for a moment, we talked about obviously the sort of volatility that transpired over the course of 2025 and why it's had both significant impact and maybe by some metrics a bit less impact than we might have predicted in April of 2025. We also talked about the sort of enduring issue of Fed independence, the political forces that suggest that, folks will do what is necessary to maintain it. I wonder if you kind of pull these threads together, if you are starting to see patterns of behavior change in either global trade or other economic activity that suggest to you a more sustained move away from dependence on the United States. We know, of course, that dollar dominance is a very difficult thing to erode. That certainly one of the United States' most enduring sort of hegemonic advantages is likely to be the dominance of the dollar for a good long time to come. And yet it's sort of undeniable that the United States has become a highly unpredictable economic actor. And it's not just our Congress, but countries around the world that are looking at the fate of Jerome Powell, looking at this DOJ investigation to understand the stability of the very ground on which they stand. So I wonder what you're seeing out there in the global economy when it comes to the question of how other major economies are grappling with the extent of their dependence on the United States.
Yeah, so there is the set of issues around trade, and it's a little bit too soon to tell because there have been such big timing shifts, huge increases in imports earlier in 2025 to get ahead of the tariffs, an air pocket with much less imports in the second part of the year, and how much countries will be exporting to the United States or how much the United States will be importing, on a sustainable basis is less clear. I think, if you look at dollar dominance over the last year, probably the most important thing that happened was not all the uncertainty Trump created for the global economy, but the Genius Act and the United States being all in on stable coins. You can look at the different things that matter for the dollar, how it's held in reserves, how it's used for invoicing, how it's used for settlement, how it's used in foreign exchange transactions, and they tend to range from sort of 60 to 90%. You look at stable coins and it's above 99%. And it doesn't look like anything is going to change that anytime soon. So there's now, when you look at how important the dollar is, there's another thing you want to weigh in that, if anything, pulls the average up, not down.
Pretty remarkable, given all that's taken place, and yet I think undeniably true. As we come to the end of our time together, Jason, we have obviously been reflecting a lot on major economic shocks, forms of upheaval that have created massive change and uncertainty. We've talked about places in which the U.S. economy and global economy have maybe been more resilient than expected, and just now about the fact that many areas of U.S. economic advantage seem to remain quite durable. Given this picture, I wonder how you think about economic opportunity going forward. And here I don't mean with respect to policy in the next 2 or 3 years, but rather whether all of this economic upheaval might actually provide opportunities for constructive change if new leadership, either kind of a more mainstream Republican or a Democrat, were to take power in 2029. Could there be openings for new forms of economic cooperation, new ways of thinking about trade, new types of compacts that would not previously have been thinkable without this level of uncertainty and upheaval? And how do you think about how folks might get there?
Yeah, I mean, big picture, the most important thing is there's been this widespread in both parties discontent with what they call neoliberalism, the set of policies that they argue prevailed from Reagan through Obama. Now, I think there's a lot of problems with that term, some very, very big differences between the policies of, say, Ronald Reagan or Barack Obama, especially when it comes to something like the degree of progressivity in the fiscal system. But, there is something in common in terms of, a broad commitment to, free trade, a general direction of travel in a deregulatory direction, and sort of debating then the role of the fiscal system. So there's been a bipartisan discontent. You heard it from Biden, you hear it from Trump. What there has not been, though, is any replacement for it that anyone likes. People liked Bidenomics even less than they liked that previous consensus. And so far they like Trumponomics even less than they liked Bidenomics. And so that's where I do think there's this very big opening. Now, there's part of me that wants to just go back to the good old days, and I thought policymaking was perfectly fine back then. I'm obviously a little bit biased. I was a part of that policymaking. And so maybe the attempt to find a new alternative failed, and we should have a counter-revolution and go back to the old one. It's also possible, though, something new will emerge. But the reason there is that opportunity is we haven't, neither Biden nor Trump, found a viable alternative arrangement that actually worked well for the economy, worked for people, and satisfied them.
As we close up today, Jason, at the risk of sort of pushing you into speculative lands or kind of imaginary lands where we have not yet arrived, when you think about alternatives, what do those look like? As you're saying, both things are clearly true, that there is this sort of narrative of discontent with neoliberalism, with the basic trappings of the so-called international order, including the global trading system. And yet neither party has proven able to fashion a solution that both scratches that political discontent and provides an economic answer that's really salient to the American people. One could imagine a new leader doubling down on some form of industrial policy. One could imagine new innovation-driven strategies, although those, of course, come with the risk that they increase the dynamics that we're seeing right now, which is an AI revolution that has the potential to benefit a very small segment of the population while producing negative outcomes for others. So when you think about kind of the parameters of what new options might look like, just give our listeners a sense of what might be out there.
Look, I think the positive scenario would be a return to a positive sum, growth-oriented mentality. Tech, as you had in your question, would be part of that. Taking trade-offs seriously around fiscal policy would be part of that. A return to more trade and gains from trade is another part of that positive sum mentality. The darker possibility, at least from my perspective, would be a deepening techlash, where AI takes on the political role that China and to some degree Mexico in the past have played. And it's, the villain for all job loss, even if it's only the villain for some job loss. And, to me, that's worrying both from an economic perspective, because I do think it's our best shot at higher productivity growth, which is our best shot at faster wage growth. Doesn't all sorts of perils, but it's the best shot we have. And then also national security as well, because I don't see anything resembling an AI-related techlash happening in any meaningful way in China. So we would be, to some degree, unilaterally disarming that. So for me, that's the most important question, is it sort of positive sum growth oriented, or a sort of fight over a zero-sum pie that actually in the process of fighting for it ends up being negative sum and a smaller pie for all.
Well, we here at the Asia Group will be watching this and all of the spaces we talked about today closely. And Jason, we'll look forward to having you back very soon to take stock of where we are, both in 2026 and as we look ahead to potential future options for the global economy and trade. It's been great chatting today.
Great being with you.
Thanks so much. As I reflect on my conversation with Professor Furman, I'm struck by the duality of the fact that there is at once both an extraordinary amount of change taking place in the way we order ourselves economically, and still quite a great deal of promise for the US and the global economies to be resilient and to reorder themselves in productive ways. While I think, and I believe Jason shared with us the idea that there is no going back to the U.S. economic role in the world as it was, or the global trading order we once knew, it's also clear that there are many forces, both in the United States and around the world, that are trying to provide for global economic stability and are leaving open the space for new leadership a few years from now to potentially derive new economic compacts with the world that answer the moment that we're living through. While it seems unlikely to me that we'll be headed back towards a form of neoliberalism that prevailed from the 1980s onward, it's also clear that there are many nations around the world that still believe in free trade and are still looking to maintain their deep and abiding ties with the United States however possible. It's also the case that many of those same nations share our skepticism about the Chinese economy and want to make sure that they're insulated from the potential shocks from AI and best able to take advantages of them. So I leave this conversation with Professor Furman actually relatively more optimistic than I was, that the United States can, at some point in the future, be a leader towards a new economic ordering future that continues to provide for the stability that businesses around the world have come to depend upon. This episode of What Comes Next was produced by Rufun Dewey-Astino and executive produced by Lauren Dueck with editorial input from Prashant Jha. The episode also contains music by Cody Martin via Soundstripe. What Comes Next is a production of the Asia Group and is powered by Tag AI, Tag's geopolitical decision engine for business. We'll see you on the next episode.